It's Monday, the 1st of May, 2023. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. Let's jump straight into story number 1. It's a big one because it's a huge week for the economy, with the Reserve Bank Board deliberating on interest rates tomorrow and plenty of other economic data around.
Sure is, Michael. Interest rates obviously is the big one, and one of the country's leading economists, Bill Evans, now thinks the central bank won't hike rates tomorrow. He says following the release of inflation figures last week, the boards are likely to extend its pause. Now, we know inflation has well and truly peaked, but how quickly it falls is the great unknown. Interestingly, National Australia boss Ross McEwen over the weekend said that the local economy remains in good shape, helped by low unemployment and a recovering housing market. Overall, 21 of the 30 economists surveyed by Bloomberg expect the Reserve Bank to keep the cash rate unchanged at 3.6% at tomorrow's board meeting. The other 9 think there'll be a 25 basis point increase. Financial markets, which got it right last time, well, they're pricing in almost no chance of an interest rate increase.
Sean, certainly the housing market seems to have found a new life with another good weekend for auction clearances.
The national clearance rate was 69.2% according to CoreLogic. That's 7 weeks in a row around the 70% mark, which is a bit of a benchmark in this world. Sydney was at nearly 71%. Across the country, auction volumes were up 20% over the week, but are still 36% lower than a year ago. Tim Lawless from CoreLogic is quoted this morning as saying the clearance rate reflects the shifting housing market across the country and is further proof that the housing market has moved through an inflection point, with selling conditions strong amid low supply. Of course, Michael, any interest rate rise tomorrow could hurt confidence in the housing market pretty quickly.
Sean, story number 2, the federal budget is just a week away. Can you believe it? It's become pretty obvious that it's going to include a significant cost of living package.
In fact, they're pretty much the words used by Finance Minister Katie Gallagher. Yesterday, she said the budget will have a significant cost of living package, and that cost of living package will be targeted to the most vulnerable Australians. Experts are tipping that the JobKeeper rate will increase among other payments. Gallagher also said the government has found billions and billions of dollars in savings. Meanwhile, Treasurer Jim Chalmers said the small business energy incentive will kick in from July 1. That'll help SMEs pay their electricity bill. Communications Minister Michelle Rowland said the government will expand its first home buyer scheme to more people, including older women. The scheme allows applicants to have as low as 5% deposit for a home. The federal government kicks in, or at least acts as a guarantor for the other 15%. That means you can waive the need for lenders' mortgage insurance to be paid. And finally, there were media reports over the weekend that the budget bottom line could be much, much higher than expected, or much less worse, I suppose, thanks to rising tax revenue from iron ore, coal and gas, and a low unemployment rate.
Okay, story number 3, Sean. Speaking of cost of living, this certainly isn't going to help. Telstra's mobile phone plans are set to rise by up to 20%, with the other 2 major players, Optus and TPG, expected to follow suit as well.
Telstra has sent an email to customers saying the changes are needed to keep up investment in its mobile network, products and services. The biggest increase proportionally is to the base weekly $10 recharge option, which will go to $12. The $300 annual recharge will cost $320. Australia's biggest telco said it will increase data allowances across all affected plans, while neither Optus nor TPG have lifted prices. Market watchers expect both to do so.
Story number 4, the competition watchdog has released a report into social media highlighting, it's a fairly comprehensive list, Sean, a lack of competition, excessive data collection practices, the prevalence of scams, and inadequate disclosure of sponsored content by influencers and brands.
Yes, it's the 6th report from the Australian Competition and Consumer Commission, and it recommends reforms including the establishment of an external digital ombudsman scheme. The ACCC points to the significant market power of a tech giant Meta. Now, Australians continue to spend more time on Facebook and Instagram, which of course are owned by Meta. Australians continue to spend more time on Facebook and Instagram combined than any other social media platform, and those 2 services owned by Meta have the most Australian users and advertisers. The report also says 81% of influencer posts are potentially misleading. 81%, incredible. While younger Australians are more likely to use multiple social media services like TikTok, older Australians still rely heavily on Facebook and Insta. The ACCC says the report reinforces the need for reform, particularly around scams, harmful apps and fake reviews.
All right, last one. Story number 5. Less than 3 years, Sean, after saving Sea Folly from administration, the swimwear label's private equity owner is putting the high-profile brand, the Aussie brand, up for sale.
Il Catterton owns it. It counts LVMH and the wealthy Arnault family as major backers. They've told potential investors it expects sales at Sea Folly to increase by almost 45% over the next 6 years or so, according to a report in the Financial Review. It's marking the sale as a unique opportunity to partner with one of Australia's most iconic brands. Remember, earlier this year, another homegrown brand, Aesop, was sold by its Brazilian owner to French company L'Oreal for $3.7 billion. I mentioned LVMH and the Arnault family. Must just quickly say, luxury brands are doing really well at the moment. LVMH's share price has gone through the roof. According to Bloomberg Billionaires list, owner Bernard Arnault, who holds a huge chunk of LVMH, is now worth about $210 billion US, well ahead of number 2 in the world, Elon Musk. He's worth about $180 billion US.
All right, there we go. 5 stories in 5 minutes. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 1st of May, 2023. Remember to hit follow on the podcast, and if 5 minutes isn't enough for you, you can find our longer daily show called Fear and Greed wherever you listen to podcasts, and that also comes with a bunch of interviews and things. Today is a great interview if you happen to be interested in investing. Don't forget as well, the Amazon Echo smart speaker range comes with Alexa built in. Simply say, Alexa, play the Fast 5 by Fear and Greed podcast. Catch the latest episode, and you can grab yours now at amazon.com.au. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.